Overnight versus regular session performance gap, myth or reality. There is a lot of people that think the markets do these incredible things in the overnight session, and then during the day, they're kind of flat. Certainly not the case today, but there is the idea that over the years, starting in the 90s, that was the case. We're going to show you a little bit. We're going to show you a lot of research that shows it's a little bit more of a myth than reality.
All right, let's do it.
Bear with me. There is a lot here, Mr. Batista. The claim, Wall Street believes, and there's lots of articles, there's stories, there's even books written on this. Much of Wall Street believes that the majority of the S&P 500 cumulative percentage gains over the past 30 years have come from overnight sessions. And it's better to have these things on, per se, not trade overnight, because you can't always do that, than the regular session. So is it true, and should traders trade more overnight, meaning directionally, more often? Because if you look at this slide right here, the red line is the cumulative overnight performance, and the blue line is not the overnight performance. So you can say, of course we should. That's easy to see. Let's go to the next line. So using the SPY, OHLC is open, high, low, close. Okay? Open, high, low, close.
So that would be the opposite, right? That would be showing you the move, right?
What do you mean?
Well, they're comparing things like opening high and closing low. That would be a big move, correct?
No. We're using the daily open, high, low, and close data.
Okay.
It's just saying it's the open data, the high data, the low data, and the closed data to do the study. That's all to say. So we analyzed the overnight and the regular session performance for the cumulative price change. And we found that the claim is missing historical context. There are no more statistical advantage in the overnight sessions over the regular sessions because they have nearly the same win rate and percentage return since 2008. So since the meltdown in 2008 till 2025, which is basically 16 or 17 years, they have essentially overnight and intraday have essentially the exact same win rate and the exact same percentage return. Let's go next slide.
Okay.
So as you can see here in blue on the top, that is the cumulative overnight. And as you can see on the bottom, that is the intraday. And if you just looked at these two, you'd be like, well, how are these even close to the same? But if you start at 2008, they are exactly the same. What's weird in there is that .com boom in 1998, 1999, 2000, and then from 2008 to where we are today, they're exactly the same. So the overnight session, most of the SPY percent gains are attributed to the overnight sessions. The regular session contributes less to the SPY cumulative percent compared to overnight. That's what was always said. But while the overnight session cumulative percentage change is dominant, this is the result of the overnight session from 1996 to 2003, which no longer continued after 2003, and from 2008 on, they're virtually identical.
Okay, a little surprising, but can you throw something out? I mean,
sure, you can throw out, because there were some crazy things that happened in the .com boom, because a lot of you are too young to remember. But in the crazy .com markets in the late 90s, there were stocks that would close at $5 and open at $105. Not a takeover, nothing except we're talking about like a regular stock, like or just some average company you've never heard of. They would put a .com on the end, and the stock would go up $100 intraday. I'm sorry, $100 overnight, and then sell off the next day. I mean, you remember those, Pat. Now, the bad thing for Tony and myself was we were trading an index product and all the action was in some of these equities. And it was very tough to make that transition. But
it was frightening the way to look at it. I mean, like, you would see all that and you'd be like, I'm missing out on everything.
Yeah, I actually thought I was literally missing out on everything.
Right, right.
And that was horrible. Let's go next slide, Beth. But from 2008 till now, the cumulative performance is the same. Now you can see here, this is where the crossover is. And in 2008, you can see how the performances are very similar. So using a 10-year rolling cumulative percent change, we find that the performance gap has narrowed since 2008. So 1996 to 2003, huge divergence. Post 2008, convergence. The gap between the overnight and regular sessions has significantly narrowed and is now just, they go back and forth. And so, there's no real trading in the overnight session. So it would just be like positioning. Let's go next.
Well, futures, I guess, if you really wanted to look at that, you could do it that way.
Yeah, it's kind of hard.
Oh, so, it's not. It's impossible, is what I would say.
Yeah. So here you can see this is the a bar chart. The blue here is the overnight session, and the yellow is the intraday sessions. And you can see how they kind of flip-flopped the last, however many years. But the overnight sessions are calmer now, and they have more frequent small movements within, minus a half to plus a half, and the intraday sessions are more volatile, blah, blah, blah. And there's been a complete kind of just change since for the last 15 or 16, 17 years. Let's go to the next slide. It's a really clean looking chart. Beautiful.
Yep.
Okay. So then we got down and we said, okay, like I told you, there's gonna be a lot of content in here. And we decided to look at the actual moves. So we're going to give you some context here. The overnight sessions have tighter moves than the regular intraday sessions. So the overnight sessions, 51% of the days, the SPY is from down 0.5% to up 0.5%. In the regular sessions, it's only 36.61% of the days. They fall within the inside of a half a standard deviation, okay, or 0.5% up or down. What's interesting about that is that we've gone from, in decades past, the biggest moves happening overnight to the current situation where the biggest moves happen intraday. And we actually put all the statistics on this page for you to see.
There's a lot there. I'm trying to look through it right now.
Yeah, you can, greater than, less than 1%, greater than 1%, everything's in there, but we summarized it on the right-hand side here. 51% of the days, the SPY movement in the overnight session stays within that minus 0.5% to plus 0.5%, and then it's 36.6 on the intraday, so it's just more volatile intraday. And that's what you want.
And what would you say a standard deviation of the overnight move would be? Would you say it would be 1/4 to about 1/3%?
Well, I
know it depends on what the implied volatility.
Yeah, I think so. Right now, with the index at 6,000, it's 30 handles plus or minus.
Yeah. So you're almost looking at a little less than 0.5%.
Yeah, so I say 0.5% plus or minus 0.5. It's 30. It's 30 handles up or down.
Yep, got it.
Let's go to the next slide. Okay, more statistics for you here. So the market session statistics comparison. So this is the return comparison. So the overnight session has a higher mean and median returns overall. However, post 2008, both sessions show a similar return of 0.028 and 0.025. The regular session, though, is 43% more volatile than the overnight session, and you can see that because the overnight sessions are kind of they're a little boring. Yeah. And the risk profile of the overnight session has a higher crash risk. This is what's important. There's more overnight risk because you can't do that much, and that's just the normal sessions have more big moves, but there's actually less crash risk. The overnight session has a slightly higher win rate, but again, it's minuscule, 0.028 to 0.025. We also put all the numbers on the. We also put all the kind of the cool numbers on the left-hand column here. It's hard to read, but we did everything from, we have skewness, we have kurtosis, we have we actually have all the days in here, and all the days post 2008, all the days before that. It's 8,000 days of research we did for this study. Let's go.
A lot of days.
A lot of days. A lot of days. Next slide, Beth. So, fun fact, non-predictive relationship between the overnight and the regular sessions using a scatter plot, meaning that when you look at that scatter plot, there is no predictive relationship between the two sessions. So, you know, I used to say, like I was watching the overnight session in the NASDAQ, and I'm like, I felt really good that the NASDAQ was going to be a little weak today from watching it in the overnight session. And it turned out it was a little weak. But based on our research here, there is no predictive relationship, period.
So you saw something that wasn't there.
No, I saw some. I can see things that other people can't see.
Got it. Perfect. Okay, beautiful. Just wanted to make sure.
But the statistics say there is no predictive relationship. When I saw it overnight, you know, obviously I was wrong by 100 points first, and then it went our way. So it wasn't that easy. Let's go to the next slide. So these are some of the takeaways. I know there's a lot in here, so you can go back to it anytime you want. But historical performance, the overnight session's cumulative percent advantage was primarily driven by the dot-com bubble. However, this advantage has since diminished and is no longer valid. Traders will not benefit more from trading the overnight session compared with the regular trading session. From 2008 forward, the average percentage returns and the probability of up and down days has become virtually identical. The overnight session has calmer days, but with a higher crash risk, strong negative skewness, and more extreme price movements, very high kurtosis. The regular session has frequent large moves, but with more balanced profile and near zero skewness. That's intraday. The non-predictive relationship, there is no predictive relationship between the overnight and the regular sessions. What happens overnight cannot predict what will happen during the regular trading session.